Hello and welcome to my channel, The Quality Investor. With earnings season in full swing, I've been providing commentary on various businesses and their results. This is a way for me to assess if my investment thesis remains intact, if it is a stock that I hold. After the bell today, Applied Materials, ticker AMAT, released their earnings. I did an analysis on Applied Materials a few weeks ago, and I did recommend buying up to about $145 a share. Well, I was buying some shares myself, and then Applied Materials promptly blew past my $145 target in the last couple days and closed at just under $155 per share today. However, there has been a 7% drop post-market, as we can see right here, despite an excellent earnings report. The reason for this drop is news came out today that Applied Materials is under criminal investigation for violating U.S. export rules on shipping semiconductor tech to certain Chinese chip makers. And so on this video today, I want to briefly discuss the earnings as well as this setback for Applied Materials and check in on my investment thesis. All right, let's get into the earnings. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, hit that notification bell so you can know right away when I post more stock analysis content. So here's that Reuters article making public the news that Applied Materials is under investigation. Exclusive: Applied Materials under U.S. criminal probe for shipments to China's SMIC per sources. The largest U.S. semiconductor equipment maker is being probed by the Justice Department for sending equipment to SMIC via South Korea without export licenses, the sources said. Hundreds of millions of dollars of equipment is involved. One of the people said, Reuters is reporting details of the probe for the first time. Reuters could not determine whether Applied Materials violated the law, and it is not clear whether the investigation will result in charges. The company produced semiconductor equipment in Massachusetts and then repeatedly shipped the equipment from its plant in Gloucester to a subsidiary in South Korea, the people said. From there, the equipment went on to China's Semiconductor Manufacturing International Corporation. People familiar with the probe said the shipments began after the U.S. Commerce Department added SMIC to its entity list in December 2020, which restricted exports of goods and technology to the company. Two of the sources said that took place in 2021 and 2022. SMIC was placed on the list over its apparent ties to the Chinese military. SMIC did not immediately respond to requests for comment on the shipments from Applied Materials. SMIC denied ties with the Chinese military, saying that it manufactures chips and provides services solely for civilian and commercial end users and end uses. So the headline itself seems a little disconcerting, and I'm definitely going to be keeping an eye on this as I move forward in my investment in Applied Materials. However, the CEO on the earnings call today, he said that the rules are complex, and while we are working with the government to clarify certain details, we see no incremental material impact to Applied at this time. So for me, the two big takeaways from this are that quote by the CEO, Gary Dickerson. And essentially, if he doesn't see any material impact on this, I'm not going to be too worried. You have to remember what's most likely going to happen if there was wrongdoing is that the government will reach an agreement with Applied Materials about a fine. And that fine will be in the range of hundreds of millions of dollars. So there's not going to be a massive impact to free cash flow like we're seeing with, say, the 3M lawsuit in the U.S. Army. My second main takeaway is that this line right here, Reuters could not determine whether Applied Materials violated the law, and it isn't clear whether the investigation will result in charges. So right now, that's all this is. It's a probe. And my feeling is that Applied Materials will work with the U.S. government. They're going to get clarification on some of the rules. There may not have been some unintended violations of rules, but that will be worked out in some sort of plea agreement with the government if it even comes to that. So as of right now, I'm not too worried about it. I am actually kind of happy about the 7% drop, as I will show later in this video. And regarding any potential fine amount, what we're looking at here is unparalleled $300 million civil penalty for export control violations, underscores the imperative of strong compliance for companies operating internationally. The U.S. Commerce Department's Bureau of Industry and Security has reached a $300 million settlement with Seagate Technology to resolve violations of U.S. export control restrictions on shipments to Huawei Technologies. BIS alleged and Seagate admitted that after BIS imposed export controls specifically targeting Huawei in 2020, Seagate continued to sell more than 7.4 million hard disk drives to Huawei valued at over $1.1 billion without BIS authorization. So this is dated at April 25th, 2023. So this is definitely recent. And of course, the Biden administration is going after these rules pretty stringently to prevent exports going to China, which I think is a very good thing. I do want to keep American tech out of the hands of the Chinese military. However, we see here that Seagate Technology did over $1.1 billion without authorization and was fined about $300 million. So assuming that Applied Materials admits to anything here, we'll see probably something somewhere in this neighborhood of a $300 million fine. And let's also be clear on that. The free cash flow right now is nearing $8 billion. So this really will be chump change for Applied Materials. So looking at a quick summary of their earnings here, we can see on a full year basis here, they increased their net sales by 3%. They only increased their gross margin by 0.2 points or 20 basis points. And then they actually decreased their operating margin by 130 basis points. Now, I do want to see more margin expansion here. However, I do understand that 2023 has been a very tough year in general for the semiconductor market as a whole. So that's actually not terrible in my estimation, especially when they increased the numbers here for net income and earnings per share quite a bit. So 5% on the full year for the net income increase and a 9% increase the full year for earnings per share. However, one of my main investment thesis points is the Applied Global Services, which is their fastest growing segment. And they just had a record revenue in Q4 and in fiscal year 23. That's their 17th consecutive quarter of year-over-year growth. And they have positive leading indicators of future growth. So they've increased the industry's biggest installed base by 5%. They grew their long-term subscription service agreements to 63% of recurring revenue. And when I did my video, it was at just under 60% of recurring revenue. And they maintain a subscription renewal rate at approximately 90%. That creates very predictive, good, solid revenue. And this is giving you a little bit more color to the Applied Global Services. Again, one of my main investment theses is the Applied Global Services growth. And they see that it's a function of increasing install base, the service intensity, and subscription agreements. Their fiscal year 2023 milestones, they grew their installed base to 48,000 tools, increased tools under service agreement to 16.6 thousand, added new sensor and AI-based service capabilities, as well as delivering eco-friendly hardware and software products as a service. They also recently signed the largest global comprehensive services agreement, and Applied Global Services produces more than enough operating profit to cover the company's dividend. And looking at the income statement as a whole here, we can just see very strong top line growth here for net sales, as well as very strong bottom line growth here down at earnings per share. Virtually every major metric increased, and that's what we want to see. I mean, the net income, $300 million higher than the prior year. Gross profits increased. I mean, every metric is doing very well. And also, we can also see the weighted average number of shares outstanding decrease. So we see strong share buybacks, strong top line growth, strong bottom line growth, and they're also paying out a dividend. So again, a lot to like here with the latest earnings for Applied Materials. And all this was in a very down year for the industry as a whole. Okay, here we are in my valuation file after I updated for Applied Materials' latest quarter. And to give you a little bit of context, the valuation analysis I did a few weeks ago, I had the acceptable buy price at about $147. And at that time, I think they were trading at around $130, $139. And I started buying. However, like I said earlier in the video, they shot up right away, right past that $145, and they closed today at $154.81. So after updating the numbers for this quarter, I came back with a number of $150.50, a weight recommendation currently. And the reason is because right now, that acceptable buy price is a little bit less than what the current share price is. However, if that 7% drop post-market that we saw today continues tomorrow and it does continue to fall and is around another 7% drop when the market opens, then I definitely accept that or expect this price to come down quite a bit to the high 130s, low 140s range. And then I'm giving myself a 20% margin of safety. Now, this is assuming nothing bad is going to happen with their investigation. So these are, I guess, and this is an optimistic case. However, a bear case for Applied Materials, and this is assuming that there might be a potential fine hurting their free cash flow for that China probe, as well as lighter China sales. And since about a quarter of Applied Materials revenue does come from China, so here we're looking at, with the same 20% margin of safety, an acceptable buy price of $131.35. So that price will have to come down quite a bit to get down to that level. I mean, at $154 right now, you're looking at a drop tomorrow of around 10 to 15% to get below $131. So we'll see what happens tomorrow. And honestly, I'm not that worried about the investigation right now. The article indicated there's been nothing filed in terms of charges. And as we did see, there is the fines, potential fines for this won't be that material to Applied Materials if they actually come to fruition. All in all, another very strong quarter for Applied Materials. And I do plan to buy some more shares tomorrow when the market opens due to that decline I expect because of that investigation news. So before we go, I do want to emphasize that this is not financial advice and I do own a stake in Applied Materials. With that, thank you for watching today's video. And before we go, let me know what you think. Please comment below. I love the feedback and I love hearing everybody's opinions. Also, please hit that like button. And if you found this info helpful, please subscribe to the channel and join our community. Thank you and happy investing.